This is the fall of Malaysia's largest company. What's happening to Petronas? Will this lead to Malaysia total economy collapsed? Stay tuned to find out.
A decarbonized future is not a future completely absent of hydrocarbons.
Fall of Malaysia's largest company. What's happening to Petronas? Once they were the tallest towers in the world. A symbol of ambition, of unity, of a Malaysia that refused to be ignored. But today, that symbol is cracking. Petronas, Malaysia's crown jewel, its biggest taxpayer, its largest corporate employer, the lifeblood of the national budget. Now, 5,000 workers gone. Billions in losses, and a power struggle in Sarawak that's no longer just regional, it's existential. This isn't just another oil company trimming fat, it's the unraveling of something far bigger, because Petronas isn't just a business, it's a national identity, a symbol of post-colonial pride, and it may be collapsing from the inside out. What happens when the most powerful company in Malaysia begins to fall? This is the story. Chapter 1. The Shock Layoffs. They called it strategic workforce optimization, a cold phrase for something deeply human. 5,000 people, engineers, technicians, admin staff, entire families, uprooted overnight. This isn't just a belt-tightening move. It's the largest retrenchment in Petronas' history. In a rare public statement, Petronas CEO Tengku Mohammed Taufik Aziz, we acknowledge that this process may result in difficult but necessary adjustments. This is not a retrenchment exercise, but a business-driven right-sizing initiative. If the workforce exceeds what is required for efficient operations, it will right-size it so that the business unit remains profitable and viable. This wasn't selective. It hit upstream, downstream headquarters. Top to bottom, they're freezing hiring until the end of 2026. And yes, many of the affected are on contract. But when a national icon like Petronas starts shedding staff, the message to Malaysians is clear. This isn't just about surviving the oil cycle. It's about rewriting a Malaysia economic future. Chapter 2. The Bleeding Subsidiaries. Petronas' first major fracture came not upstream, but in its sprawling chemical empire. The crown jewel of its downstream arm, Petronas Chemicals Group, or PCG, recorded a shock 18 million ringgit net loss in the first quarter of 2025, despite revenue reaching 7.7 billion ringgit. That alone would worry investors, but PCG's earnings before interest, tax, depreciation, and amortization, EBITDA, fell a dramatic 23% to 892 million ringgit, down from 1,160 million ringgit a year ago, hit by weak margins, supply disruptions, and forex blows. To put it simply, an empire built on chemicals is bleeding. Plant utilization was still high, 94%, but that only masked deeper woes. Feedstock shortages hit Pengerang, utility glitches slowed Kurdi, and stronger ringgit ate into overseas pricing. Markets responded harshly. PCG stock plunged over 20 cents in a single session, dragging down broader Petronas-linked equities. Petronas Gas and Petronas Dagangan also felt the tremors. Shares dropped as regional investors began to question the group's health. Beyond PCG, other Petronas subsidiaries aren't immune. Petronas Carigali, the exploration arm, is battling regulatory setbacks in Sarawak, a battle we'll explore later. Petroleum National Berhad's trading and downstream units are grappling with with falling global oil prices and rising operational costs, it's not just one division in trouble. The whole house is showing cracks, because when a diversified energy giant relies on every leg of its business pulling weight, upstream, downstream, chemicals, and several are faltering, the fragility becomes systemic. And now, with coalitions forming in Sarawak and federal coffers tightening, the stakes for Petronas and Malaysia have never been higher. And if you're Malaysian, do hit that like button and comment Malaysian here. Chapter 3: The Sarawak Power Struggle. This isn't just about oil, it's about power, territory, and who really gets to decide Malaysia's future. For decades, Petronas controlled the country's entire oil and gas industry, from the tip of Johor to the shores of Borneo. But in the east, something is shifting. Sarawak has had enough, and now it's fighting back through its own oil company, PETROS, established by the Sarawak government. PETROS is more than just a corporate player. It's a statement, a declaration that the state wants its resources back and the revenue that comes with them. And in 2024, PETROS made its boldest move yet, claiming exclusive rights to all gas distribution in Sarawak. Pipelines, terminals, everything. Petronas pushed back, but this time, it didn't hold all the cards. Sarawak's leaders stood firm. They weren't asking, they were taking. Prime Minister Anwar Ibrahim tried to cool things down, calling for commercial transparency. He promised no contracts would be violated, but behind closed doors, tensions remained. Because here's the truth: if Sarawak fully controls its gas, Petronas could lose billions in future revenue, and the federal government even more. Less income for national programs, less control from Putrajaya, and for Sarawak, more leverage than ever before. Since the 1970s, Petronas has pumped over 280 billion ringgit into Sarawak's development. Now Sarawak wants to chart its own path and keep the profits at home. This is no longer a policy disagreement. It's a constitutional showdown, a question of sovereignty. And if this rift continues to grow, Malaysia's energy industry and its national unity may never look the same again. Do you really agree with what has been done by Sarawak? Comment below if you agree with this. Chapter 4: Cracks in the Malaysia National Budget. For most nations, an oil company is just that, a company. But in Malaysia, Petronas is the piggy bank. Every year, billions flow from its vaults straight into Putrajaya. Healthcare, education, civil service salaries, all of it, in one way or another, rides on Petronas's performance. So when Petronas bleeds, the entire nation feels it. In 2024 alone, Petronas contributed over 50 billion ringgit to the national budget. That's more than 20% of total government revenue. No other state-owned company carries that kind of weight. Now, imagine that stream drying up, with falling profits, weakening subsidiaries, and state-level fights like Sarawak's heating up. Petronas is under pressure like never before, and so is Malaysia's fiscal future. Already whispers are growing in Parliament. Can the government afford to maintain subsidies? Can it keep civil servants on payroll? Can it still delay unpopular taxes like GST? The Prime Minister's office insists, yes, our fundamentals are strong, but economists aren't so sure. Ratings agencies are watching, investors are pulling back, and confidence that fragile currency is slipping, because Petronas isn't just a company in decline. It's a warning signal. When your national budget is tethered to oil, any disruption becomes a national crisis. And now, with global crude prices volatile, with Sarawak asserting control, and Petronas undergoing its largest workforce purge ever. The question isn't whether Malaysia can adjust, it's whether it can do so fast enough before the cracks in the budget become a collapse. Can you just imagine all the suffering that will be faced by the 5,000 workers that have been laid off? What will happen to their family? What will happen to their kids? Chapter 5. What's next for Malaysia's oil future? Meanwhile, Sarawak is charting its own path. What happens when Sabah follows? The cracks are spreading. For Malaysia, the clock is ticking. Can Petronas rebuild? Or is this the beginning of a much bigger shift? And if you think this story ends here, you need to see what's happening on the world stage. Malaysia isn't just reacting, it's repositioning. A powerful new alliance is forming with China, ASEAN, and the Gulf states at the center. And Malaysia, it might be playing a bigger role than anyone expected. Click here to watch our latest video. The New World Order has just begun. It's the geopolitical game changer the West isn't ready for.